your background. So when did you first hear about Bitcoin, and how did you get involved into the industry?
Definitely. So I learned about Bitcoin in college in around 2012.
Wow, that's early.
Yeah, really through the first major application on Bitcoin, which was the Silk Road. I was not a buyer or a seller on the Silk Road, but it was really a fascinating venue or marketplace to exchange with anyone, anywhere in the world. And Bitcoin was the currency that allowed those transactions to happen. So as a thought experiment, it was a pretty radical idea. Of course, the Silk Road would later be shut down and was an illegal enterprise in the eyes of many governments. But that being the first major application on top of Bitcoin, that captured my interest. And then it wasn't until 2014 actually that I joined a firm called ARK Invest, run by Cathie Wood, that I really started professionally focusing on Bitcoin. And so an interesting lesson from that for me was it's really an application that grabbed my attention first and that I thought was quite cool. And then that over time led me to learn about Bitcoin itself.
And in what do you see currently the value of Bitcoin?
I think of Bitcoin certainly as a digital gold. That's what we all talk about it as. I think you can also think of it as a type of liquidity sponge or mirror. So it really reflects the amount of liquidity in the global monetary system. And so when liquidity is sloshing around and rates are low, as was the case in 2021, Bitcoin as a sponge absorbs a lot of that liquidity and grows in value. And then when liquidity gets sucked out of the system, when the cost of capital is higher because rates are higher, Bitcoin itself also shrinks as a reflection of the shrinking of liquidity. So I think that's one way to think of it. Running with the mirror analogy, I would say that Bitcoin, because it is unchanging, it's probably one of the most conservative or unchanging technologies we have available to us. Because of that nature, it's like a mirror. It doesn't change and it just reflects whatever society is doing. And that's a very valuable tool within a world that's changing at an accelerating rate. In 2015, Grayscale approached us because they had the Bitcoin Investment Trust, and they told us at ARK that, hey, we think you guys can put the Bitcoin Investment Trust into your ETFs. And so that really started to give ARK license to give its clients direct Bitcoin exposure, and ARK was the first public fund manager to do so. Now, in this time frame, Ethereum is born, right? And the crypto space started to really increase in its diversity. But being at a public fund manager, there was only so much that I could do as an analyst to contribute, say, investable assets to the ETFs. And so in that time period, I met Joel Monegro, who was an analyst at Unisquare Ventures. And Unisquare Ventures had recently led the Series A at Coinbase and was itself getting very interested in cryptocurrencies. And so Joel was coming to crypto from the private market side, the venture side, and I was coming to crypto from the public market side. Now, crypto is really the combination of the two, right? Because you have these very early stage teams that are launching these public networks with publicly traded assets, and then you transition, into more of, say, a public markets realm of expertise once the asset is liquid, but still dealing with very early stage teams. So, you fast forward into late 2016, Joel and I started having a conversation about, hey, we should probably be running a dedicated fund. Because as much as we enjoyed working at ARK and Unisquare Ventures, those were more traditional institutions that were set up to invest in equities, and crypto assets are not equities. So in 2017, with the blessing of Cathie from ARK and Brad and Fred from Unisquare Ventures, Joel and I set out to build Placeholder.
And currently you invest as well into decentralized projects, so why are you bullish on decentralization and why don't you consider investing in centralized companies?
Right, so we think of these as decentralized information networks, and the way that we approach them is our mission is to better distribute data, wealth, and power. And when we look at these decentralized information networks, to us, their architecture strikes at the heart of what is a consolidating market within Web 2. And so what I mean by that is if you look at the Web 2 incumbents, they're really data monopolies of different sorts. They charge for access to proprietary data, or they provide a proprietary service based on proprietary data. And what blockchains do is they're an open standard for us to share or authenticate the use of data to one another. And so if you're an investor within the Web 2 world, you're tucking around Meta or Apple or Google because those are such massive data aggregators. Whereas in the Web 3 world, we say, okay, the data's not privately owned, right? You as a user get to own your data and authenticate who gets access to it. And so when you study the history of information technology, it's always an open standard like this that goes at the heart of the prior business model that unlocks the preceding market. And so for us, it's inevitable that blockchains say unlock a consolidating Web 2 market, which should lead to an explosion of goods and services produced on top of blockchains.
And do you think in the future CeFi and DeFi will exist, or will we have only decentralized platforms?
I think we'll have a combination of centralized and decentralized because the protocols themselves are decentralized, right? They're these supranational, really entities that have a set of logic within them that we can all call from anywhere in the world to provision us services. But then on top of these protocols, we tend to have centralized entities that have to KYC AML the residents of different nations and to pay taxes or whatever is required of a company operating in that jurisdiction and serving citizens of that jurisdiction. And so and then you also have things like customer service, right? We're at the early stage of crypto adoption where there's a lot of natives, they can figure out tech problems on their own, but as we go more and more mainstream, people want to be able to pick up the phone and say, hey, I can't figure this out. And so that model is really more suited to a company model, where you're raising capital either to support cost structure like a company, or you're running profitably such that you can provision those services. And so you'll have a layering of decentralized protocols, potentially some decentralized applications, but then the top layer will often be a centralized company.
And now as well, we see many institutionals getting into crypto. So how do you see the sentiment on the market among the institutionals, and how do you see the development of their participation in the industry? And as well, you mentioned that there will be centralized entities which will do KYC. So this is what we have in the case of institutionals, permissioned KYC.
Definitely. So we can think of an institution as a group of individuals that formalize their mandate, right? And I would say that blockchains themselves are a 21st century native institution. But then the incumbent institutions of different kinds are adopting blockchains in different ways. And so often finance is an early adopter, right? It's very clear the way in which a new technology influences the margins of a financial company. And so we've seen a lot of experimentation within the financial incumbents, really going back to 2016. I remember that was the year of blockchain, not Bitcoin, and lots of institutions were experimenting with private blockchains as a type of technology. They wanted to control the whole system, but that is not the core of why public blockchains exist. And so now those institutions, having failed really with their private blockchain experiments, are coming back to public blockchains, right? And so this is where you see things like Visa is experimenting with Ethereum and Solana for USDC or stablecoin settlements. Or you have PayPal recently launched their own stablecoin, right? So a type of free private USD that can be transacted at low cost to anyone, anywhere in the world. So we have examples from the financial institutions where they're now experimenting with public blockchains, and that's only going to continue. I would say if you skip to, say, the media side, you have brands that are experimenting with non-fungible tokens, NFTs, right? And that is really at an earlier stage of experimentation. You could say it's kind of like that 2016 blockchain, not Bitcoin era for finance, is now you have brands or media companies experimenting with, okay, how can we provision unique content or unique goods through these non-fungible tokens? And so we should see an explosion of that in the next expansion. Where it's going to take us, I don't know. but it's clear in speaking with those companies and some of our portfolio companies working with those entities that everyone's got their eye on the ball.
And some countries as well adopted alternatively Bitcoin as legal tender, such as El Salvador and Central African Republic, and some other cities have such experiments. So what are views on that, and how, should those countries adopt Bitcoin as legal tender, or maybe should they use stablecoins?
So I remember in 2015, ARK was doing research with Coinbase on its user base, and this was in the 2015-2016 era. Already at that time, we could see that Coinbase's users were not using Bitcoin all that much as a means of exchange, but they're using a lot more as a store of value. And I would say that Bitcoin is much more a savings technology than it is a transactional technology. Now, you can still transact with it, there's no doubt, and I'd say it's more useful than the traditional financial system when you're transacting with it, but the asset is designed to appreciate in value over time as it converges upon a fixed supply of 21 million units. And so that makes Bitcoin hard to spend, at least psychologically. And so what I'm excited to see with nation states is, we now have, I think in 2023, we have 4 state-sponsored mining initiatives. So that's 4 nation states that have put money into building Bitcoin mining operations. And basically what they're doing is they have a low cost of energy, and they're able to use that low cost of energy to accumulate Bitcoin and potentially put it on their balance sheet or within their national reserves. That starts to become super interesting because if you go back in time, in the 1800s, I think it was, you had gold and silver were vying with each other. And some countries like China and India actually stored a lot of their national reserves in silver, while other countries chose gold. And actually, China and India lost a major amount of their purchasing power because they had their reserves predominantly in silver, and gold became the standard. If you have a similar type of turnover, or at least if you have Bitcoin rising from its current base of $500 billion to something like gold at $20 trillion total value, the countries that choose to store a significant percent of their national reserves in Bitcoin will rise in their relative purchasing power as compared to countries that don't. And so that starts to become very interesting from geopolitical perspective and the power dynamics between different nations.
So do you think that many countries in future can diversify their treasury and hold Bitcoins?
I think we're going to see an increasing trend of companies putting Bitcoin within their national reserves, but predominantly doing it through being miners on the grid, and also using the Bitcoin grid using the Bitcoin network to stabilize their own grids, especially as we transition more and more to renewable technologies. Bitcoin as a purchaser of last resort can help stabilize an electric grid, especially an electric grid that relies heavily on renewable technologies. And so this is where Bitcoin becomes less of an ideological tool and more of an economic tool that stabilizes some really key components of nation states' infrastructure.
And as well in Placeholder VC, you invested into a number of different other networks, Avalanche, Solana. You specified in many of your interviews that you are quite bullish on it, in different Bitcoin networks, stacks, ZK, Laul, Salio, and so on. So can you tell more about this, and why did you decide to diversify to many networks and not to focus on only one, and how do you see the future of these networks?
Totally. So Bitcoin is, as we've discussed, a digital gold. It uses a blockchain in order to transact value. Then you had Ethereum come along, and it has a ledger that keeps track of value and logic, right? And so that was an addition to the crypto space in 2015 when Ethereum launched. And the innovation hasn't stopped there, right? So if you look at something like Solana, similar to Ethereum, it has a ledger that keeps track of value and logic, but it's chosen a different architecture that prioritizes transaction and settlement at near the speed of light, and does it at extremely low cost. And so the user experience within Solana is the closest to a Web 2 user experience of any that you can currently find in the crypto space. And so, we believe that having a foundation like that is going to be important for getting the mainstream on board, because they want a snappy experience. They don't want to wait. Even waiting 2 seconds is too long, right? And you have Solana at about 400 milliseconds, so less than half a second. And then there are other networks like Avalanche. One of the core founders there is someone I've known for a long time, Eamon Gunsir, very credible fellow, former professor of distributed systems at Cornell, who has chosen a different architecture of subnets in order to allow groups to more easily spin out, you can call them parallel blockchains of sorts, and then using a shared security model with AVAX. That's also quite similar, at least in principles, to what Cosmos has done. And so the reason I'm going through the different architectures is there are trade-offs that go with each architecture, and the trade-offs will appeal to different developer sets. So if you look at who these different networks appeal to, the trade-offs often appeal to different sets of developers. So Ethereum, very idealistic, and really experimenting with, say, what are the really new things and new economic models that can be deployed on blockchains. If you look at an ecosystem like Solana, you tend to see a lot of developers and builders who have Web 2 background or backgrounds from traditional finance, and they tend to be a bit more pragmatic. Now, you still have, say, the core tenets of blockchains at Solana's core, things that we've already discussed, which are important, but within the Solana ecosystem, that pragmatism can potentially lead to applications that appeal to the mainstream more, because they're focused a bit more on onboarding or user experience. This is not to say that Ethereum fails. It's not to say that at all. I think that Bitcoin succeeds. I think that Ethereum succeeds, and I think that Solana succeeds alongside those ecosystems. It's more just the different flavors, and one analogy that you can use is there are different economies in the world, right? And so you have America, or you have China, or you have the European Union. Those all have different flavors that appeal to different citizens. Citizens sometimes will immigrate, go to other places. You also have trade relations between those economies. And so I think that as Bitcoin, Ethereum, Solana, Avalanche, so on scale, you'll start to see representations that more look like global economies, where you have immigration between those different nations, you have trade relations between those nations, and they have different systems of production.
And as well, you invested into some NFT companies, so in what do you see the value of NFTs? They're currently quite down, so was it just the hype, or do you see the future in this technology?
I definitely see the future in NFTs, and here it's important to go back to what each thing means. So NFTs refer to non-fungible tokens, which is really just the non-fungible world of assets. And in our physical world, we have all kinds of non-fungible instruments. There are actually more non-fungible instruments than there are fungible. Things like, houses, cars, lots of financial instruments like structured debt instruments, you could even argue, are more non-fungible than they are fungible. Pairs of shoes, rare art, fine wine, you name it. And so crypto is experimenting with non-fungible assets. Right now, they're digital native assets, and so people will say, why does this JPEG, cost $100,000? And, that's a good question to ask, but it's not, the JPEG that costs $100,000 is really membership into a club. And there are lots of clubs in our physical world that cost way too much money, but that gives you access to a set of people that's important to your identity, or that unlock, other things that are useful in your life. And so I think that the ways in which you can use NFTs are vast. I mean, we just talked about, say, representations of art or access like clubs, but there's going to be all kinds of financial instruments that are represented as NFTs, potentially real estate, and you can even start to get into forms of governance themselves as being non-fungible. And so we're just at the beginning of experimenting with NFTs. If you go back in time, 2017 was really the explosion of fungible assets, mostly built on Ethereum. And it took us, after 2017, it took us 2018, 19, 20 to build out DeFi, decentralized finance. And now, those fungible assets and DeFi are maturing into the internet financial system, but it's been, 17, 18, 19, 20, 21, 22, 23. It's been 7 years now. NFTs really had their first aha or big boom in 2021, raised lots of capital, very static, not that interesting, but now you have builders really experimenting at the edge, and so I think in the coming years is when we'll see really what NFTs are meant to be.
And how do you see current market, and in your opinion, when will we see the next bull market, and what will be the catalyst for the next bull market?
So current market is definitely depressed, and I was actually, when I joined ARK in 2014, that was the 2014-15 bear market, and then I went through the 2018-19 bear market, and now here we are in the 2022-2023 bear market. There's lots of commonalities between the bear markets. The prior cycles, high flyers tend to sell off 95% plus. The media writes all kinds of nasty things about us and says that we're on our way to the graveyard, and none of these things tend to be true, because you have the underlying protocols themselves growing, formalizing, becoming more robust. You have more entrepreneurs who are building more systems on top of them. And what I would say with the current environment is we're in a very high rate environment. And so in a high rate environment, the most long duration assets, so the assets that are looking the most into the future, get very heavily discounted. And this would also apply to high risk equities, not just crypto assets. And so crypto assets are very discounted based on these high rates. But when rates roll over, when liquidity rolls back into the system, there is more license to experiment with capital. And so you'll start to see capital start to flow back into more of these long duration experiments, which would be crypto assets. And all the while, the improvement of the underlying infrastructure and the new applications that are being launched is ongoing. So it's a funny thing where, on one hand, I would say that the fundamentals don't change that much between bull and bear markets. They're really going in one direction, slowly up and to the right, sometimes more quickly, but generally up and to the right. And then it's the market is booming and busting around those increasing fundamentals.
And now there is a lot of talks about Bitcoin's spot ETF approval. So what are your expectations, and why is it important, and why do many people expect the bull market after its approval?
Well, people expect a bull market after the spot ETF approval, because if there's lots of people that are subscribing to that ETF or purchasing units of that ETF, then the underlying issue of the ETF has to go out, accumulate Bitcoin from the open market in order to have that as collateral or the backing to the ETF itself. And it is an important moment, I would say, for the legitimization of the space. Crypto's been pursuing a spot Bitcoin ETF really for as long as I can remember. I see it as inevitable. It's really just a matter of when the SEC is going to approve the instrument. And when they do approve the instrument, I think they're going to approve a number of issuers. So we'll have a pretty quick explosion of spot Bitcoin ETFs. And then that makes holding Bitcoin a lot more accessible to anyone who has an equities brokerage account.
And now you as well live in US, so how do you see the regulations in US? And US is definitely was not really friendly to our space. So do you see any involvements in that area, and how do you see other jurisdictions? We are here in Asia, in Singapore. In which jurisdictions do you have the most activity?
Certainly. So right now, Asia is a lot more friendly to crypto than the US is. But I would say that the US is on the precipice of regulatory and legislative clarity. And what I mean by that is people can look at the different legal actions from the SEC and say, oh my God, this means that crypto's going away in the US. But it's not actually the way it works. It's really the setup for us to have the debates either in the courts or through the legislative process in order to get more clarity, such that entrepreneurs have the rules they need to responsibly innovate. And so I see what's going on in the US as ultimately a good thing. It's going to take us a couple of years to work through the conversations that need to be had in order to provide that type of clarity. But once we have it, that's going to bring in a whole new wave of institutions and people who right now view crypto as too risky because they don't have the rules that they need to operate. Meanwhile, crypto is a global phenomenon, and you pointed out Asia, there's Europe as well, there's Africa, there's South America, and you have different jurisdictions that are in competition with the US. And so the more the US makes crypto adoption harder, at least in the next few years while we're figuring it out, the more it gives a potential advantage to the other jurisdictions that fast track clarity for crypto entrepreneurs. And I see that as ultimately a good thing. The US is a very wealthy nation, and crypto is a type of technology that allows smaller actors to bond together, to coordinate, and to rise relative to larger actors. And so, in a way, it's poetic that the U.S. is saying, hey, we need to investigate what's going on here. And while they're temporarily slowing things down in the U.S., that gives everyone else an advantage to potentially catch up with the U.S. And so I think that that's going to become more of a conversation in the U.S. itself as people say, hey, the rate at which we're going through the legislative process is maybe too slow, and that's pushing out innovation. And so you'll probably see an acceleration of the process. It's all a pretty standard set of proceedings, and so I view the rollout of blockchains as inevitable, and the legal clarity also as inevitable.
And the last questions, for what do we need for the mass adoption of crypto?
What do we need for the mass adoption of crypto? We need to keep experimenting, and entrepreneurs are doing that on a daily basis in the crypto space. But I would say more than anything, it needs to get increasingly easier and fun to use. And so right now, crypto is a little too slow, a little too expensive, and a little too nerdy. And so the more that we have candy-coated fun experiences in the form of easy-to-use applications, the more people will experiment with it. We certainly saw that in 2021 with NFTs. That was crypto's most mainstream moment, because it wasn't nerdy, it wasn't directly financialized, it was more fun collecting of interesting digital instruments. And so we're going to see that morph into, say, gaming or different media-based applications. And then on the financial side, I think you'll see a maturation from defiant DeFi into a more legitimate internet financial system, where you have providers that are giving people a savings technology that's in their pocket, right? Because not everyone has a savings technology. Not everyone gets access to the dollar, or I would say actually access to Bitcoin is more widely available than access to the dollar, depending on where you live in the world. And then there's also the transactional mechanisms or debt issuance or whatever it might be. And so I think that a lot of crypto will be going back to the basics and making it such that anyone without, say, a technical background can use crypto applications for the things they need.
Thank you for sharing your thoughts with us, and thank you for such informative interview.
Thank you for the great questions.